Paul, let's talk about Alphabet. Let's talk about Amazon. If I take a look at the options pricing, the market is pricing in quite a lot of volatility around both these earnings reports. What are you guys anticipating, and do you think we're going to get that kind of volatility?
Yeah, historically, these names are pretty volatile around their earnings releases, so this quarter might not be any different. But I think investors are generally pretty bullish about both of these names, short term and longer term. When you talk about Alphabet, it's really about the monetization of their huge search engine base. It's also about their YouTube video business, and it's also about their cloud business. So there's several levers here of revenue growth that this company can pull. And what it kind of comes down to every quarter is, what kind of how do they manage their costs and what drops to the bottom line? So investors, I think, feel very good about the top line for this story going forward. And then it's just a question of how they manage their expenses and drive earnings. For Amazon, obviously, the secular story remains very, very strong. Similar to Google, they have the cloud business for them, which they are the largest player in cloud. And that is a great supplement to what is their core business of e-commerce, which continues to show very consistent growth. And again, investors feel very comfortable about the long-term top-line story for Amazon.
Are both of these seen as idiosyncratic standalone stories, or do they have the potential to lift the whole tech sector if they beat?
Well, I think particularly for Alphabet, since it's really driven by user engagement and then the advertising that can drive. So it's when you think about Google, when you think about Facebook, they still are advertising-driven media companies. They're digital media companies, and their top line of their revenue is reflective a lot of how the economy is going. If advertisers feel good, they're going to allocate more money to their ad budgets. Amazon, on the other side, plays a little bit more to consumer disposable income, how consumers are feeling, how much are they spending. But I think even in Amazon, there's that long-term secular growth story of the growth in e-commerce vis-a-vis traditional retailing. And again, that is the backdrop that I think investors feel very comfortable with, in which they allow the company to continue to reinvest in the business, forego near-term profitability because for that long-term growth story.
Paul, to kind of follow up on Vonnie's question, though, a lot of people have been telling me that these two reports in particular are going to define this earnings season. If they deliver, then maybe the market stabilizes. If there is a miss, then this could provide another significant leg lower. Are we looking at it correctly when we look at it that way?
That's certainly been the case really over the last several years. When you take a look at the outperformance of NASDAQ over the last several years, it's been, really driven by the FANG stocks, Facebook, Amazon, Netflix and Google. And I don't see any reason for that really to change here. These are both, obviously large cap, widely held stocks, and, their top lines they really are reflective of what's going on out there in the economy in terms of advertising and in terms of consumer purchasing power, not just domestically, but on a global scale. So I suspect that they will continue to have a particularly outsized impact on the overall market.